You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's gone up.
Hey everyone, thanks for tuning in to another episode of RE Bitcoin. In studio with me today is Dan Hillery and Mason Foard, two of the founding members of True North, MSTR True North to be more specific. They've been following the strategy STRC trades as closely as anyone in the entire world, and I've been lucky enough to pick their brains from time to time. And today, you, the audience, are going to be lucky enough to kind of hear some of their responses to some of the newest questions and breaking news related to strategy and Strive and their digital income, digital products that are producing yield now daily in the case with Strive. So guys, thanks for joining me.
Yeah, thanks for having us on, Chase. Happy to be here.
Yeah, it's like to be here again, Chase. I remember we spent a lot of time talking together at the beginning of this journey, and now we've come a long way. All of us have. So it's like to be here.
Yeah, I actually talked to Dan before I even officially was working in Bitcoin. So I was lucky enough to connect very early on there. And we both kind of were talking about MSTR as the true hurdle rate in the space back then. I don't know, maybe that's changed for Dan a bit from time to time, depending on the MNAV of the day, but we'll get into all that. So my first question, just to get us rolling, is what is the most exciting thing happening in Bitcoin today, and why is it STRC and SATA?
Yeah,
That's kind of a leading question, Chase.
Yeah. I think you read our mind. Yeah, digital credit is obviously the most exciting thing happening in the space, and it's taking most of the news and attention. And we just got back from the Bitcoin conference, and it was obviously all anybody could talk about was digital credit and a little bit of AI because of the innovation that we've seen in AI in the past 6 months. But for me, the reason that digital credit is such a big deal is that it's an application on top of Bitcoin that hasn't existed before, and it makes the capital asset of Bitcoin, it makes it very useful to a new range of participants. And that range of participants is incredibly broad. We're talking retail investors who may not want the high volatility and long duration of holding Bitcoin, right? If you're a Bitcoin holder, you need to be in it for the long run. Typically, we say like 4 to 5 years of just holding it and not selling it. So what digital credit does is it provides a high yield, short duration, low volatility alternative that it's not directly backed by Bitcoin, but this is kind of semantics, but you have a massive balance sheet that over collateralizes the instrument. I think stretch right now is 5-1. And what this application does is it broadens kind of the capital horizons or different pools that Bitcoin can really go into. And if you look at kind of the global capital allocation pools, credit is a ginormous pool, over 300 trillion. And right now, I think Stretch just surpassed 10 billion of issuance. I think SATA adds a little bit more to that. So there's huge potential here, even in comparison to something like private credit, which is a multi-trillion-dollar capital pool as well. And I think digital credit is competing with not only other credit instruments, but really all assets, all traditional assets, including things like, I just said it, private credit, PE, real estate, even equities. I think digital credit is really going after everything in the traditional landscape. So that's why it's really exciting for me.
Yeah, I agree with that, Mason. And I think one of the main things that's happened between last July and this time this year, so July 2025 and May of 2026, was that we saw a real product market fit with STRC, and then obviously the follow-on issuance of SATA. And we Mason and I in particular, had been covering the preferred equities as they came out, as they were issued, starting all the way back in January of 2025 with STRK, which was the first convertible preferred. But none of these products had real product market fit. Their volatility was a little bit too high. The market just wasn't simply adopting them at the rate at which they're adopting STRC. So we saw this iteration over time, and we believe digital credit would be a good idea. But it was STRC, it was SATA that clearly has found product market fit, and it took some entrepreneurial action on the behalf of strategy to find that right instrument. So I think that's why this is so exciting, is because it's not only a theory, right? It's being played out in terms of trading volume in the market as a demonstration of demand for these instruments. So, everything's kind of working right now.
Yeah, I think it really is a testament to how many people want what Bitcoin provides if you can remove the duration and the volatility. Obviously, strategy has had success in launching the STRC product. As you said, a lot of demand, billions coming in almost on a daily basis now. I'm curious, have you guys in your own life tried STRC pilling folks around you? Has it been much easier to convince the people in your own life that STRC is worthwhile inside of a portfolio, perhaps easier than it was to convince people of Bitcoin itself?
Yeah, I personally have a really interesting example of this. I've been in Bitcoin for over half a decade now, and of course, once you're in Bitcoin and working in this industry, you talk about it with your friends and family. And my father, who has a small business, I've been kind of pounding on him over the years, saying, "Hey, you should add Bitcoin to your balance sheet. You should add Bitcoin to your balance sheet." And he's been hesitant because of the volatility. If you are a business owner or somebody who is managing your reserves for your business, and there's maybe some uncertainty there, you may have a capital expense that is unforeseen in the next 4 years. What Stretch really provides is that short duration, low volatility. So I began talking to him about Stretch and potentially adding it to the balance sheet, and he is far more open to it. And we've begun the discussions of how do we do this, how do we put it in place, what percentage of the overall capital. And what's really compelling is just the high yield compared to a traditional bank or overnight market. It's definitely not something that he's going to full port, right, yet. But I think over time, as the dividends continue to be paid out, as there's more liquidity bolstered in the market, more and more participants will be willing to accept that digital credit is a reality, that it's here to stay, that it has worked and that will continue to work into the future. So that is one experience that I've had personally, where it's been an application of Bitcoin, right? Digital credit wouldn't exist without Bitcoin, but it is filling a need in the market, which ultimately Bitcoin couldn't fulfill because of its unique trading dynamics at the current.
Yeah. Okay. And you guys have access to Ben Workman and Jeff Walton more than most. So I'm not going to say that you guys knew it was coming ahead of time, because that'd be insider trading. But after the fact now, how did these guys pull off daily dividends? Because it seems like even Strategy and Saylor have talked about the difficulty in going anything under 10 days of dividend issuance. So do you have any insight into how they kind of technically routed around that issue?
Yeah, they really only had to get the approval of the transfer agent, their I think it's their prime broker, their transfer agent, and DTCC, which it actually wasn't an SEC compliance question for them. So Look, I wasn't there for the conversations, but it sounds like they were able to move fast and innovate quickly, especially with a new product with low trading liquidity. One thing that was of note is that SATA didn't go through a shareholder approval process for the change in dividends. Obviously, there was a shareholder vote for the change in dividend rate of STRC. Right now, it's going to be semi-monthly, and that's being approved by shareholders of STRC. There was no vote performed on SATA in some of these 10K or some of the prospectus clauses. If the upgrade or change or amendment to the prospectus of SATA, the preferred instrument, is non-detrimental to the holders or net beneficial to the holders, then there doesn't have to be a vote passed to initiate that change. And so I think that's the rule that SATA and Strive was banking on, is this is an advantageous change for SATA holders, and therefore there doesn't need to necessarily be a common shareholder or a SATA shareholder vote. So psych, they got it through regardless.
Okay, yeah. And obviously, Dan, you've been deep into the digital money space, which you can think of as kind of a layer 3 on Bitcoin. This change to daily dividends for SATA, you could argue, is going to attract that layer 3 capital to position itself against SATA instead of STRC. But I think you could maybe also argue that in some ways the volatility will be so low that it makes those savings coins irrelevant. Where do you guys kind of fall on which of those two is more likely?
Yeah, I feel very strongly that SATA has really become now a threat to the stablecoin market, but also it's going to be very difficult for issuers in the crypto native market in DeFi to create value add on top of SATA. Specifically, when we were first launching the STRC-backed stablecoin buck and with talking with some of the competitors, we were all trying to, the ultimate goal was to create a yield stream that streamed daily dividends, essentially real-time accrual dividends to holders to reduce volatility and smooth out, and allow people to enter and exit without capturing the ex-dividend date. And now with SATA, I mean, it does that directly in the public markets, so you don't have to take on any of the DeFi smart contract risk that you would be taking on elsewhere. Now, that doesn't solve the problem of permissionless securities, and that's a whole different conversation. But the only real upgrade, I think, that could be made to SATA in its current form for maybe a stablecoin holder or someone like that is if it was permissionless. And so I think it will be tokenized and issued in a permissionless fashion on platforms like Hyperliquid and even on Ethereum rails via Kraken, et cetera. And I know people working on Bitcoin layer 2s to tokenize STRC and provide that in a permissionless fashion. So I think those problems are going to get solved. And I think there's going to be many issuers. All the liquidity is going to be central around SATA and Stretch.
Okay, and do we believe at this point that Saylor is looking at what SATA just pulled off on daily dividends and, sent the legal department to go work on this, and that perhaps STRC is going to be a close follower, or perhaps they're going to wait to see if the volume increases as a result of this? But, based on everything Saylor has talked about in terms of increasing the frequency of STRC and how he looks at these types of products, it seems like a daily dividend is in line with how he sees their ability to improve STRC long term. So, are we expecting news shortly?
Look, I think they have to go through with the semi-monthly change in dividend payments. So once that gets approved by shareholders, we'll switch to semi-monthly, and then they can discuss maybe going to daily. I think there will be a conversation with some of the big trading firms before they move to daily, because a lot of people benefit greatly off the arbitrage that's on the ex-dividend date. So we'll see how that plays out.
Yeah, I think this innovation provides them a moment to really watch what's going to happen, right? They need to have this vote go through, and there may be second, third, fourth order effects that were unforeseen from this change, right? This is the first time in history that a daily dividend has been enacted. So I think it provides them the opportunity to watch, and I think in the future, within the year, they could probably enact something similar if it does hold up to theory, which I think in theory it should be incredibly positive.
Okay, so now I want to get into some of the strategy STRC talk, including, some of the maybe more well thought out arguments against these products. And obviously you guys know where I stand, but in my daily life, when I try to convince people that this is not a Ponzi scheme, there are certain questions that I don't yet have a great answer in response to. And so whether we work on that here as a team or you guys already have great answers to these, we're going to find out shortly. But let's start by explaining the relationship between STRC issuance and MSTR issuance. I believe there's something like a 2-to-1 MSTR to STRC issuance. How does that rate change over time? What is the rationale for the 2-to-1? Can you just kind of bake that out for us?
Dan, how do you take that?
Okay. Yeah, I think the biggest part of the entire capital balance sheet math with regards to MSTR and Stretch is that, there's a risk transfer of volatility and performance. So the excess return is passed through to the common shareholder. Obviously, the excess risk in the form of volatility is as well. Whereas the senior preferred, so Stretch and SATA, are taking on the first 13 or 11% respectively performance of Bitcoin, over collateralized, so it's de-risked and has very, very low volatility. So the risk is being transferred to two different parties. Now that over collateralization and leverage, so it's over collateralization or extra security for the preferred holder, that's leverage for the common holder, right? That's how the risk is transferred. And that leverage is referred to as I call it the amplification ratio. That's what strategy refers to it as, but you can use leverage ratio as well. And that's just the amount of notional outstanding preferred equity plus the convertible debt, which is rolling off, divided by the total Bitcoin holdings. And that's an effective form of leverage for the common holder. So right now, strategy after the most recent $2 billion purchase last week is sitting at a 37% amplification ratio. So that's it's a little bit more than a 1.5 times effective leverage for the common holder, which is a pretty big sort of amount of leverage, and that cuts in both directions. However, I think moving forward, that necessarily, as Bitcoin's price increases, that will their balance sheet will deleverage. They'll be able to issue more SATA and maintain that amplification ratio. That amplification ratio I expect to be kept below 50%, so 50 to 30 in that window, in my opinion.
Yeah, and there's some really unique scenarios with, if you look at how Bitcoin trades, I think it's pretty well known. There's some statistic where 10 days a year makes up 90% of the gains. So if we do get into, let's say, a really raging bull market, and Bitcoin goes up pretty hard, you could see that the amplification really drop off as the collateral grows in value. And there's some there's some question of, are they going to be able to keep up the amplification? And I think yes, because it becomes more attractive from a credit standpoint as the collateral grows. But you want to keep the amplification steady, because in my mind, that's what justifies a premium.
Yeah.
Above one, and right, and if you have the premium, that allows you to ATM potentially as a lever. And so there's many different levers that they can pull, and that's kind of what this last earnings call addressed. Was they are, I guess, trying to maximize optionality from a capital management standpoint in the position that they are. And I think it was kind of like a three-pronged approach where they want to do what's good for the equity holder, they want to do what's good for the common, and they want to do what's good for Bitcoin. And that is ultimately a balancing act. And when those three things are in harmony, that's when you kind of get, that's when the engines are firing. That's when the machine works. That's when there should be a positive MNAV. The credit should be stable. Bitcoin should have a consistent bid. And I think that's kind of really what we've been in to some extent for the past few months in a bear market, which is really beautiful to see. And I think in a recent interview, Saylor said we haven't even seen this in a bull market, and that's what's potentially very exciting is as the liquidity grows and stretch, as Bitcoin sentiment flips, as the Lindy effect kicks in, as these dividends continue to pay, as Bitcoin gets more accepted in the zeitgeist, this thing will compound at levels pretty absurd growth, and we've already begun to see that, but I don't think that's stopping anytime soon. When you look at the size of Stretch or digital credit in relation to everything, all the capital in the world, all of the money that has continued to be printed. So, I think we're in a very exciting phase, really year one of digital credit, and the growth will continue to be pretty absurd.
Yeah, and you guys are obviously very attuned to the various levers and optionality that strategy has. And on the earnings call, Saylor talked about how theoretically they could just sell Bitcoin to pay the STRC dividends. They could theoretically issue STRC to buy back MSTR common if they felt that the premium was being undervalued. But play out this one scenario for me. What would we expect to happen to the MSTR common equity if all Saylor did for the next few years was issue STRC and sell Bitcoin to pay the dividend? Would we expect the common equity to explode in premium, or would something perhaps still keep that in its current MNAV?
Well, so it goes back to this question of leverage ratio. So if Bitcoin continues to appreciate in a kind of straight path to the right, they can issue more digital credit, apply more leverage, and maintain a leverage as the price of Bitcoin goes up. However, like Saylor has mentioned this before, you don't want to create a rocket where you reach your destination, but all the passengers are dead by the time you get there. And that's the effect of creating too much leverage. For example, if Bitcoin tends to be, if it's overheated, say Bitcoin's up at 250K in the next 12 months, and it crashes by 50%, and they were 40% levered, or amplification was around where it is now, by issuing more and more STRC without issuing more and more common, right? That's how you would get to have the same amplification today as you would at a higher Bitcoin price. There needs to be continued stretch issuance on the rise in Bitcoin's price. If at 250K Bitcoin, there's a 40% amplification and Bitcoin crashes by 50%, you're now at 80% amplification if they don't issue common and delever their balance sheet. That sort of volatility will be almost impossible to stomach for a common shareholder. So I think the strategy is strategically levering up right now with stretch issuance. But as Bitcoin's price rises, I actually expect their amplification ratio to go down from where it is today, for them to use the common ATM strategically to expand their collateral balance sheet, which de-amplifies the common equity, because it's two kind of counterbalances. It's the common, which delevers, and stretch, which levers, and they have those tools that they're going to manage as professional allocators.
Yeah, and I think when we're talking about management and optionality, in the most recent earnings call, they spoke about having algorithms. They're creating pretty sophisticated trading algorithms that have all of these inputs, and they are monitoring it daily. And to me, that's incredibly exciting, because you can have an AI with kind of the principle, or maybe not an AI, but just an algorithm. I guess that is AI, but that has these principles and is able to see what is the most accretive trade, or what trade creates the most virtuous, harmonious system within their capital structure. And what's just exciting to me is I think that strips away some of the key man risk of Saylor, particularly. I think Saylor is a massive marketing arm and massive distribution. And of course, he's incredibly positive to the Bitcoin space. And I think at some points he is controversial, but I think it's hard to argue that he's been negative. I think he's been incredibly positive. But I think we're at this point of strategy where they have the model and it's just about the management. And if you can strip away any human risk and really rely on just looking at the math, looking at what is the best possible output here, they can manage to that. And it's incredibly, it makes you feel reassured as a shareholder or potential shareholder that it's not just going to be willy-nilly human decisions. No, they are looking at kind of the vast array of options and picking what is best.
Yeah, and I think there's an expectation that the Fed will begin lowering rates soon, and that will hopefully attract more capital to STRC, push them above par more frequently, and therefore start to give strategy the optionality to actually lower the yield of STRC. So I'm curious what you guys think about the trade-off here. Yes, theoretically, strategy could begin lowering the yield if that plays out. But you could also see a scenario where they keep the yield where it's at or potentially even increase the yield, because if they really believe that Bitcoin's going to perform at a 25% compound annual growth rate, what's an extra 100 basis points if it attracts an extra $1 billion of capital into the Bitcoin network onto their balance sheet, on a daily basis. So how do you guys think that they'll actually weigh that trade-off of more Bitcoin at this moment in the growth curve versus trying to have less of a yield dividend hurdle rate?
Dan, you want to take that?
Sure, yeah. Well, simply if they can attract more capital with a marginal 100, 200 bips on STRC, Bitcoin's a close-ended network. And therefore, every dollar of capital that ultimately pushes the terminal performance of Bitcoin higher. So I think they're obviously weighing the trade-offs, but their number one priority is to execute STRC's dividend rate mechanism based on their guidance to investors. And that being, they will, if it's between 99 and 100, the STRC price for the trailing 30-day volume weighted average price, then they won't raise the dividend rate. So I don't think they're going to go out and start raising the dividend rate willy-nilly. They're just going to adhere to their guidance and keep it elevated so long as there's demand in the market. And, my expectation is it stays at 11.5 for a very, very long time because they can limit the price by issuing ATM. They don't need to decrease the dividend rate to put a cap on the price. Again, they can use the ATM to cap the price.
Yeah, I have a few quotes here that I think address this question. And these are from Saylor from a recent CoinDesk interview. He said, "We're not trying to pay the credit investor the least amount we can pay them. We're enthusiastically embracing providing the best credit in the world with the highest Sharpe ratio. We want to drive the vol from 3 to 1.5, hold the dividend constant, jack up the Sharpe ratio to 5, 6, 7, or 8. And then he also said, I'd rather buy 40 billion of Bitcoin, issue 40 billion of credit, and pay 11.5 than buy 10 billion of Bitcoin, issue 10 billion of credit, and pay 9.5. So I think that's what they're trying to execute right now is, number one, provide an incredibly good product, enthusiastically embrace being the best credit instrument in the world, try to attract the capital, try to make the case for digital credit of being more transparent, less volatile, higher Sharpe ratio, over collateralized, higher in the capital stack. Make it incredibly attractive and drive that growth into the future. And the analogy he used was Amazon, right? With offering free shipping to its Prime customers, and that created incredible marketing engine, incredible growth. And then, one day in I guess it was probably the mid 2010s, they jacked up the price a little bit, and it was incredibly profitable. And I think that's the goal here, is to issue a lot of credit, have it be incredibly attractive, fuel that growth, and as long as the Bitcoin CAGR continues to do what I all think we think it will do, which is I think around 30% for the next 5 to 10 years, then they will be able to do that. If the Bitcoin vol decreases and the Bitcoin return, expected forward return decreases, then yes, there is a case to be made that they will lower the dividends. But I think the message right now is clear that it's provide incredibly attractive credit and fuel the growth of the Bitcoin network and of digital.
Yeah. And these next two questions are the two that I get the most frequently, that I find the most trouble responding to, or at least responding to in a way that satisfies the concern for somebody who's looking at strategy and just not buying it. So the first question here is, STRC is pegged to $100, but has increased its dividend 7 times in 9 months. Some say that that's a distress signal disguised as a feature. How would you respond?
Well, I'd respond with exactly the following. Before STRC, the way structured products, specifically preferred equities, tried to keep a consistent price with very little volatility is they benchmarked the interest rate off of SOFR. That works so long as the credit spread of the instrument doesn't change. If the credit spread of the instrument, the credit quality of the company changes, then you get volatility in the principal. With STRC, it's the first instrument by using a monthly dividend changing dividend rate plus a ATM shelf registration that uses the 30-day trailing price of the instrument to price the yield itself. So it's the first credit instrument in the entire financial markets that is priced based on the historical trading price of the instrument. The dividend rate is based on the historical trading price of the instrument. That's never happened before in capital markets. So I would say what the viewer with the question is saying is that there's clearly a high premium on Bitcoin-backed credit, meaning people are very skeptical of Bitcoin as collateral, so they're requiring a very high interest rate to be compensated for that underlying risk, and that's what we're seeing. As a Bitcoin believer, and by the volume reflected in MSTR's common equity, there are plenty of people that are taking the other side of that bet and saying, no, Bitcoin is in fact strong collateral, and it will likely outperform the cost of these dividend payments. So I don't think there's any real distress here so long as the common equity remains liquid, highly traded, and especially above 1 times MNAV, which are all votes of confidence that the interest rate paid on STRC won't necessarily outperform Bitcoin over the long term, or there's people still willing to take that bet.
Okay, great.
Yeah,
Thank you
I
for
think
that.
Dan nailed it.
Go ahead, Mason.
No, I think Dan nailed that.
Great. And so the next one here has to do with strategy or MSTR's share price. So MSTR is sitting at roughly the same price it was before its recent massive accumulation run, where it went from 170,000 Bitcoin to nearly 800, or I think a little bit over as of today, 850,000 Bitcoin. So the company has basically 5x'd its Bitcoin holdings, but MSTR shareholders are sitting in roughly the same place that they were in terms of MSTR share price as it was back at 170,000 Bitcoin. So to that skeptical person, they're asking, how is that not proof that the strategy is not working?
Yeah, I think it it depends what denominator you're looking at it through, and if you're maybe not in the Bitcoin space, or you're not used to looking at the world through a Bitcoin lens, then you're going to be maybe confused by what is happening. So their main KPI, what they're managing to, is increase Bitcoin per share over time, right? And what we have seen is growth of the underlying share count, and typically that would be seen as dilutive. But we know, if you've been paying attention, they've been doing something that's been referred to as accretive dilution, or that kind of doesn't really make any sense, but they're just selling common above 1 MNAV, or I guess right now their one is 1.3 0.22 MNAV, and they are. Yes, they are increasing the amount of shares, but they are selling that share at a premium. They are buying Bitcoin with it, which backs the share, and then the premium is spread to the other shareholders. So I don't have the numbers off the top of my head. Maybe Dan, you could help me out. But the share count has increased by I don't know, Dan, do you know specifically over the past few years?
No, I don't know the specifics.
Regardless, the share count has increased, but the amount of Bitcoin per share has increased more than the share count, meaning that the transactions that they've done on net have been accretive to the shareholders. And I think also you have to look at similar to Bitcoin. You could say the same about Bitcoin, right? The price of Bitcoin right now is at 80,000, or I guess 70 something right now. And in 2021, it was at 70,000 too, right? And it had tremendous volatility. But if you have a long time horizon and your denominator is Bitcoin, the Bitcoin per share over time is increasing for shareholders. And the belief is that Bitcoin, that underlying Bitcoin, will be more valuable in fiat terms into the future with incredible volatility along the way. And that volatility is, again, amplified by the amplification that the shareholders take on, the risk transfer from the debt and the preferreds above them in the capital stack. Dan, do you have anything to add there?
Yeah, I mean, it's just really a Bitcoin yield question. Bitcoin per share is the key KPI. You can look at the Bitcoin yield, the Bitcoin per share over time, and then calculate the multiple over that to try to get a good entry or exit, plus the amplification and leverage as well. So, I mean, it's just a math. It's just a math thing. This is all public accounting that's fully transparent.
So the follow-up to that, though, obviously the three of us are all believers that Bitcoin per share will translate into value in the future. But to the folks that I give a very similar response to, they say, well, Bitcoin per share doesn't matter because I have no claim to the Bitcoin. And if Bitcoin per share growth, as you're saying it has grown in MSTR's case, isn't positively affecting the fiat share price, then what do I care about Bitcoin per share? It's a made up metric.
Yeah, I mean, I think that's pretty misguided because it's Bitcoin per share plus the multiple on top of that Bitcoin per share is how the stock price is priced. So it's like saying, the EPS on Google was this when I bought it, and now the earnings per share are higher, but the price to earnings ratio went down. So the value of your stock went down. If there's valuation, there's two forms of valuation. It's how the market's valuing it and the metric which you're using to gauge the actual value per each unit of equity or share. So I would say, well, you obviously bought at a high MNAV or an expensive price relative to the Bitcoin per share, and it was going to take you a long time to get paid back the extra Bitcoin per share. For example, if you buy at a 2 times MNAV, you're effectively betting that over some foreseeable future, the Bitcoin per share doubles in your equity over that period of time. And sometimes that takes quite a while. If you buy at a discount, which over the past 6 months, there have been a few times when Strategy was trading at a discount to NAV, then you're betting that, you're getting essentially all the Bitcoin per share at a discount to the fair value. So, entry matters.
Yeah. And I think what you see with Strategy in particular, they've been around for 2 Bitcoin cycles where we've had massive price expansion and then a bear market. And what you see is during the euphoric times, that's when the MNAV increases substantially. And that increase in MNAV is a signal from the market. It is quite literally an increase of demand. So it makes sense that investors are buying at those kind of increased prices, that those incredibly high multiples. And what happens, or what seems to have happened in both instances, is the price goes back down to 1 or under 1, which we've seen in I think both cycles thus far, and it provides an incredible opportunity for people who maybe recognize that it is cheap, and there may be a potential scenario in the future where it does expand, where the market is pricing the increased Bitcoin per share rationally, or maybe potentially highly irrationally. So like any market, it's going to trade in a wide range, and there will be mispricings at times in both directions. And I think as a investor or somebody who's managing capital, that's your own personal decision of whether or not it is at a good price.
Yeah, and speaking of personal decisions and capital management, turning away from strategy now, I'm curious how you guys look at real estate, because from what I've seen, Bitcoiners are very objective in the opportunity cost of, deploying into other asset classes rather than Bitcoin, or if they are believers in strategy, something like MSTR. But, there's still this hold that real estate seems to have on us as Bitcoiners, whether it's because we value a roof over our heads or the memories with family that we can create there. It seems like we're still willing to lock up a significant amount of our net worths and our capital deployed into this asset class, even if we believe that we're at peak prices because, the baby boomers have had a generational run with the asset class. So I'm curious how, you guys are both really young guys, so maybe I'm not expecting you guys to even have a real estate portfolio, but how do you think about real estate? Is a home something you want to own, or are you such a hardcore Bitcoiner that you're like, no, I'm going to rent forever. I'm going to live Airbnb to Airbnb. A home is a terrible investment. I don't want to deal with renters, maintenance costs, etc. How do you guys look at real estate?
Yeah, I can start. Yeah, I would say I'm more in the camp, and I think it's important to acknowledge from the start that everybody has a different situation. Everybody has different priorities. Everybody has different needs in their life. And as a younger guy who is incredibly bullish on Bitcoin as kind of the ultimate form of capital, the ultimate form of money, the ultimate asset, whatever basket you want to put it in, to me, it doesn't make sense to kind of at this stage in my life take some of the capital that I've accumulated and put it into an asset which I think in Bitcoin terms is going down forever. And I think that, to me, that's what real estate is at this point, is that it's been highly monetized as a capital store value asset, because of the fact that our fiat currencies do not hold value over time. But what I will say is that real estate provides something that Bitcoin could never, and some of that's sentimental value, some of that's location, quality of life, access to family, access to nature, right? There's many reasons why people own things, and I think the ultimate goal for people is probably to live a fulfilling life and be free. And I think if you are a Bitcoiner and you decide to buy a house or be short a little bit of Bitcoin, I don't think it's the end of the world. And I think your Chase is addressing that problem or maybe that opportunity, which is super cool to see. But generally, I'm not a huge fan of real estate. I've talked to Dan before, and I think we both agreed on this. If Bitcoin didn't exist, we would both be in real estate, because we believe it is the kind of ultimately maybe the second best asset. And I think it's because of two reasons at this point. Bottlenecks and scarcity, right? There's something incredibly, physical and demanding about real estate, and there's only so much land in certain areas, and then network effects and audience and distribution, right? There's a certain population who is going to want to live in these certain communities, and they've performed very well, especially the kind of high value elite areas of the world. So that's kind of where I stand on real estate. Dan?
Yeah, I agree. I agree with all your points. I think real estate's a form of scarce, pristine capital, especially land in the right locations, and all the network effects we're talking about, the power law distributions that govern Bitcoin's growth also govern the growth of large cities. Manhattan is a great example. Manhattan real estate and network or humans being attracted to strong forms of collateral capital that aren't necessarily productive, but that do outpace the inflation rate that have been around for hundreds and hundreds of years is a great comparison or comparable for Bitcoin over the next 100, 200 years.
Yeah, I think it'll be interesting to see our generation perhaps inherit real estate portfolios from our parents, even if that's just a single family home that they grew up in, and whether those Bitcoiners, basically live on the sentimental value and keep that home, or whether they liquidate it immediately for more Bitcoin. I think it's going to be an interesting question posed to a lot of Bitcoiners, even if they don't yet have a real estate portfolio. They might split an inheritance of one with their brothers or sisters or something like that, and maybe have to convince those folks to liquidate and buy Bitcoin or buy out their portion so that they can go buy Bitcoin. But that'll be very interesting to see. One last question for you here that ties into the real estate Bitcoin front. And I first heard this from British Hodel. He talked about how he believes that the reason that real estate has been on this generational run as an asset class is because of its ability for the real estate owner to take on leverage and create credit against the home as collateral. Basically saying that whatever the best asset is for credit creation, it will, absorb a massive amount of the monetary premium. Curious what you guys think about that. Obviously, we're getting better and better in the Bitcoin world with lower and lower borrowing rates and more institutional players coming in and allowing, credit against your Bitcoin stack. That to me is a massive tailwind, but does it make sense to you guys that the ability to take on leverage and credit creation could explain a lot of the success for real estate over the last kind of half century?
Mace, you want to, I'm happy to jump in. Yeah, I think so.
Go ahead, Dan.
I think the ability to take on leverage on any asset with the kind of low or non-collateralized leverage on any asset breeds price appreciation. It's the creation of the expansion of the monetary supply effectively being pumped into hard assets, and that's why real estate's increasing value.
Yeah, I 100% see that, and I think just in the traditional finance world, real estate properties literally been around forever, from the founding of property rights, and absolutely. As fiat money has expanded, as debt has increased, the ability to borrow against it and cycle into more and more, and let the debt decrease in I guess real value over time, is a huge win if you have that opportunity. I think what our generation finds ourselves in, and potentially why the system is unsustainable, is it's increasingly hard for the vast majority of people to have enough capital or enough borrowing power to get access to it. And the question then becomes for the real estate market is, who's buying our bags, right? And that is a question I think about all the time in the face of decreasing demographics globally, and then maybe just a general trend towards freedom and assets like Bitcoin, where maybe you don't want the responsibility of being a landlord. Like, that does not sound fun to me. I'd rather hold Bitcoin and watch it go up 30% a year annualized, and borrow against it, until hopefully one day it's money. So that's where I stand on
Nice. And before we wrap and give people where they can go to follow each of your work, was there anything that you're looking at in the Bitcoin space that we didn't touch on? Anything that's been especially top of mind that you guys think is worth sharing with the audience?
No, I mean, Dan and I are a part of True North. Check out tnorth.com or our live streams every Wednesday, which are now at 6 p.m. Eastern. And we cover what's going on every week. And if something's new, it isn't new for long with us. That this market is rapidly evolving and dynamic and fast paced. So we tend to stay on top of it. And I mean, last week we touched on it, daily dividends. I think that changes the world, and it's pretty incredible to see. I just think we are going to see an evolution of money in the next 2 decades that we haven't seen for the past 2 decades. I think everything has been kind of stagnant, and I really think the world is going to change, and whether it goes towards stable coins or Bitcoin peer-to-peer or tokenized securities, we are going to see rapid change, and it's very exciting, and there's a lot of opportunity. So we are what we're trying to do is kind of be the institutional grade level head analysis, working in the space, talking to all sorts of different people, bringing on different perspectives, and hopefully that's what we can provide to the market in this time of transformation.
Yeah, it's
I agree.
amazing. Go ahead, Dan. Sorry.
Good. Yeah, I said, yeah, I agree. I think True North is where we're going to be putting together all our analysis, especially as Stretch continues to hit par and SATA hits par, and the change in the cost of capital across all the equities markets. That's pretty much the most interesting story moving forward, because Bitcoin's not a stock, it's an asset class. And now we have these preferred equities that have been tailored to the institutional mandates of most funds and most pensions, et cetera, and it will definitely eat into those capital pools.
Yeah, it's really amazing. Bitcoin hasn't changed since inception for the most part in 16 years, but the world around it is kind of constantly week to week adjusting in major ways. And every week I'm wondering, like, is there really going to be that much news in the Bitcoin space the next week? But always something new happens that actually is meaningful. And Dan and Mason really are at the forefront of that, especially if you're interested in following Saylor's accumulation with strategy. So go follow these guys. They're very active on X. Go follow MSTR True North on their weekly live stream. And if you made it this far, thanks to Mason and Dan for joining this new show of ours here at Savannah, RE Bitcoin, and for you, the listener, for checking in. And please give us a like and a subscribe, and we'll see you next time. Thank you.
Thanks, Chase.
Thanks, Chase.
You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's gone up.